Hello and welcome to this May 19th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we're featuring about a $16.6 billion technology company. It's American Tower Corp, ticker symbol AMT. If you take a look back in March, we do have a double top here in play on AMT. That was kind of our first warning that things might not be great. Actually, our first warning was this move down below the 50-day on some increasing volume. But we did come all the way back up, put in a double top, and then we came back down and lost the 50-day again. We've been trending lower. Notice the 20-day has crossed beneath the 50-day, so we have a death cross in play. And clearly the trend over the course of the last, let's call it 6 or 7 weeks, has been to the downside. Now the near term, we did move back up on the MACD, crossing back over the trigger line. But notice that this move back up was only to test the 50-day moving average. We failed on Tuesday to get through. And most of the volume on this move to the upside has been fairly light relative to what we saw on the way down. One other problem that we're seeing here is that during most of the uptrend, we saw the RSI holding around the 50 level. Certainly 40 was very good support. And then once we broke down below the 50-day moving average and the RSI went down almost to 30, you can see that we've really struggled on the way back up. As we put in the double top, we did get the RSI back to around 60 or so, and then we fell back again. And now it seems as though the RSI 50 level has been holding us some pretty big resistance. So there's a few things here that we're not particularly liking with AMT. Number one, the volume trends. You can see that most of the big volume moves have been to the downside over the course of the last 6 or 7 weeks. So that doesn't bode well for future price action. Also, the retest up here underneath the 50-day moving average has been on less volume. We did put in a reversing bearish engulfing candle on Friday, which also would lead potentially to some short-term weakness. So all in all, it looks like a pretty good short candidate here with not a whole lot of risk to the upside. Excuse me, the closer you get this up to about 42 and a quarter, the better the reward to risk would look on a short candidate. If you do close back above the 50-day moving average, say above 42 and a quarter, maybe 42.50, look to the volume. If the volume is picking up, we would definitely cover. If it is just a little above the 50-day and the volume is light, you might give it a little bit more room. But 42.50 would probably be about the limit for me. To the downside, assuming we don't get that kind of a move to the upside, what we'd look for to the downside is if you got some gap support that's going to come in at about 40.40. That's going to be the initial area of support and where you might want to take short, very quick short-term profits. If it breaks below, if AMT breaks below 40.40 on a closing basis, then that would open up 38.80, the recent lows, for a possible retest to the downside. So AMT looks like a pretty decent short candidate here. Again, as with just about every position in the market right now, because we are in this whipsaw, very volatile market, we would tend to keep stops pretty tight. Really be picky about when you put on your positions, trying to get shorts very close to resistance or trying to get into longs very close to support to minimize the downside action in the event that these picks are incorrect. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at InvestedCentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.